It is I'm going to say it again. It's a lovely Wednesday morning. It's soggy outside, but your garden is getting watered.
Right. And your lawn that didn't grow all that much last week
Is going to grow now.
is growing. Yay. 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 3 hours of lawn mowing ahead of me. That's great.
Oh, boy. But it is nice. My wife has to go out and water the garden every day, and she doesn't have to today.
No, a day off.
And probably not tomorrow.
Right, because it'll all be happy still from today.
Well, it's supposed to rain today, tonight, and early tomorrow.
Oh, okay. All right.
So,
well, we need it.
So we've been here 10 minutes talking about decks and dressing for work and all that stuff, but we have not talked about insurance. What are
We haven't.
What are we talking about
What was
today?
the thing that you asked me to talk about last week?
Were you here last week?
I was here last week. Were you here last week? That's the big question.
Well, I guess evidence would point to it. But,
Yeah, okay, all right.
There's no, I'm getting old, Mike.
There's no doubt about it.
I don't know. Did I have breakfast today?
I don't know. Did you wake up? That's the bigger question.
Yeah.
So last week,
what did I ask you?
we were talking about, it was a kind of a continued conversation on valuations for homes and replacement cost. And your question was, look, if I have a house that I'm insuring for $645,000 and I don't want to rebuild it, what are my options?
Yeah, I mean, will you get cash back? Can you say, oh, good, my house has got a replacement value of $400,000, but I can replace it for $2. I'll take the 4, buy the 2, and walk away.
Wouldn't that be a great thought? There'd be houses burning all over the Northeast Kingdom right now.
Sounds like a great investment opportunity.
You just hit the nail on the head. That's not how it's going to work.
Oh, okay.
That's not how it's going to. Wouldn't it be? I mean, that wouldn't be great. I mean, who wants to have a loss? But still. So if you are, and I think the great example, because I do come across this fairly often, you're talking about these large New England homes. That are with a very high replacement value.
Yep.
We'll often look at alternative options for coverage, like a dwelling fire policy versus a homeowner policy to offer them less coverage, and that's a whole different bag of conversation there. So we'll stay with the homeowner for now. So if somebody's insuring their house for, let's say it is a $600,000 replacement, and you're like, there's only my wife and I. When we had the 5 kids, maybe it was worth having this big house, but now that this loss has occurred and it's just my wife and I, we don't want anything that big. Well, you will actually work with the company. There's an actual cash value settlement, and they will actually specifically settle with you. And I'm sure it varies company to company. Again, these conversations really are general in nature from what I'm coming in with.
Right.
But it's not like they're just going to write a check to you and say, "Hey, happy spending." You know?
But the example you just gave, if I got a house that's, of course I'm going to rebuild it, get the most expensive, because then I can sell it and probably make off a little better, so
It's in your best interest to rebuild if you're able to. Yeah.
Right.
Yeah.
If the insurance is going to cover it and you can have a new, beautiful home, if you want to scale down after the fact, you can sell that house and go get, and then you might walk away with a little bit of jingle in your pocket. But
right, and that's a legitimate way of doing it, because
Right.
that way you're not trying to hose the insurance carrier, which is fraudulent, but now you're rebuilding with like kind of quality, living there, and go, I'm going to sell the thing now.
Yeah, and deciding it's too big for you.
Exactly. That's a fair way to go about
but
it.
as you just said, there is the opportunity to, if you wanted to maybe finagle the cash value out and build something smaller, you could do that.
Right. And the company is going to pay you what they're going to give you the money for what you're working on. There would be a specific settlement at that point.
Right.
So it's not just an arbitrary amount that just goes to you. You're working with an adjuster through the process. The adjuster's following the guidelines of the contract of the policy, which is, again, that's what you have as a contract, and they are ensuring payment is appropriate for what you're doing.
What's important to remember about this home insurance stuff that we're talking about is your home is your money. It's your hard-earned investment.
Right.
And your insurance is protecting your investment.
It's the transfer of risk from you to somebody with deep pockets.
Right.
Essentially. I mean, if you want to really break it down, that's what it is. I mean, it's a transfer of risk so that if the house that you have a $200,000 mortgage on that you're paying $900 a month on for mortgage payments burns to the ground, that you're not paying $900 a month for nothing.
Exactly.
Right.
Because you got to keep making that payment. It can destroy your credit. A lot of people have found themselves in these situations.
Right.
Where, it's not a pretty picture.
No, and don't forget, the bank has a vested interest in this too,
And-
because they've given you a mortgage. So they're going, well, we're not just going to write it off if it burns. Hey, well, we lost another one. I mean, they are listed as a mortgagee for a very specific reason. They have a right. They have a first place on the realty there.
Right. So, and another thing that's important to realize is that when you're talking to an insurance agent, make sure you got somebody who isn't just trying to get your, $85 a month or your $200 a month or whatever it is. You guys work with people because you want to have a long-term relationship.
I mean, the ultimate that's the bonus, if you will. I mean, we're not necessarily looking to get a long-term relationship. That's what we want, obviously. But our first goal is just to write a policy that's appropriate for you, because insurance is not about just going and saying this, and this, and this, and I'm done. I mean, you're covering your biggest investment in life. So it's really a discussion of what works for you. What do you feel comfortable with? What types of coverage do you think you can't live without? What exclusions scare you? How can we address that? And really whittle it down to a specific thing. You know, it comes back to all the insurance commercials that you see on TV. They've turned it into a commodity. Let's remember that insurance is not about what you pay necessarily. Sure, you don't want to pay too much. It's about what you have. Right. About what you're covered for.
Absolutely.
Yep.
And when you're ready to start that conversation with somebody you can trust, what's the phone number?
Feels weird that you just said trust and pointed to me, because I've never had that happen before. I like that. I feel good. You can give us a call. Barrett Insurance Agency. We're on Portland Street in St. Johnsbury. Our phone number is 748-5224. We're online, thebarrettagency.com. We're also on Facebook. Just look for Barrett Insurance Agency.
Yeah, I made an opening here. I can't remember what we called it.
That's okay. It's, you named it.
What was it?
Good Policies.
Good Policies.
It's called Good Policies.
There it is.
Brought to you by Barrett Insurance.
Yeah, Good Policies. That's what this.
Are you? Hold on. Is this on? Is this on?
We'll talk next week, Mike. I'll throw the phone number out there one more time.
748-5224. Have a great week.
Or on Facebook.
Yes, Barrett Insurance Agency.